Good morning. Good morning. How are you guys today? Back to doing the dirty dollar deed. Trying to make the dirty dollar. All right. It's nice to see you guys all here. Got a good little crew already first thing here in the morning. Nice to have you hanging out, starting out first thing. So let's come in and take a look at the markets and see what's going on. First thing we're going to do is make this bigger. How's that? Well, I was going to put me down here, but then that covers up all the money. If I put me up here, that covers up not such important stuff. All right. Be in the upper right-hand corner today. All right. What we're looking at. Wait a second. You're not looking at the same thing I'm looking at. What the heck is wrong here? Let's go to... Okay, we're going to look at our stock portfolio today, but before that, we're going to watch the opening bell ring, which is about to happen. So I need to switch this over. Give me 1 second. Boom, gone, back. Let's see. Why is it not giving me my... Technical difficulties. Technical difficulties. Which one is it? It's this one, isn't it? All right, we're back. We're back. We're back. There it is. Okay, sorry for the technical difficulties. Okay, now we can be down in the bottom right-hand corner down here. There we go. All right, so... And okay, we're back. All right, let's watch the morning bell, and then we're going to go over, and today is seasonals day. So we're going to go over and look at the trade miner seasonals, and we're going to see what we've got going. I'm excited to go look and see. I haven't looked at it since we all looked at it back last time together. And so I'm kind of excited to go see how our positions are turning out. All right, today's a big day in the market. Of course, not till after hours. We've got NVIDIA is going to do their reporting on how much money they're making, right? So their earnings report coming out, but it doesn't come out till after the market. So that's why we've been seeing a lot of quietness in the market lately, the last 3 or 4 days, or this, like last Friday and then the last couple of days. Been really quiet, because everybody's waiting for NVIDIA to report earnings. If NVIDIA has good earnings, I think everything's going to take off and go up. If NVIDIA has bad earnings, everything's going to break and fall. So we're going to just have to kind of wait and see. But NVIDIA doesn't report earnings until after. Everybody's anticipating that they're going to have good earnings. But there are those naysayers out there that say that they're not going to have good earnings. And so, everybody gets a guess. And of course, this is our guess right here. We're guessing long. We've already got a buy call. We got 3 calls long. We're up $892. Oh, you can't see it. There, how's that? So we're up $892 right here on our NVIDIA position. So we can come and pull that up. And you can see that the whole market's hanging out neutral, waiting for this to occur. So we bought our options here. And if you remember, we actually bought our options down here. And then we made a bunch of money all up through here. And so we rolled it into the next shares, or into the next options. Now I'm in the way here. Why do I even have to be on this damn thing? Just get out of the way, Lan. We'll just turn you off altogether. You're not interesting. All we want to see is the charts. So up here, this is where the market's going sideways. But we bought way down here at the crossing of this blue light, right? We're smart. We knew that. And then we rode it all the way up here. We took our profits and rolled it into 3 more contracts out. And we're up $892 on our NVIDIA. We can just go to chart here. You can see that right there. $892 on our NVIDIA, right? And now, if they have good earnings, we're going to expect the market to rally. I think they're going to have good earnings, or I wouldn't be hanging on to this. I'd be taking my profits right now. If they have bad earnings, well, we've got an $892 buffer for this thing to flush. It depends on how bad their earnings are. So even if they have bad earnings with NVIDIA, I don't think it's going to be really bad earnings. So we may get a flush, and then you know how the market kind of does this little thing, and then it'll, you know, probably because it's NVIDIA, will take off and go up again. We may get some sort of a move like this if it's got bad earnings, but I'm not seeing them have bad earnings, or at least not bad enough to cause that. I think we're going to see good earnings, and I think we're going to see the market go up. That's why we're long the market. And full disclosure, I have the same position in my real money account as well. A lot of what we do here in the demo account here for our classroom environment, I do a lot of that stuff in my real money account as well. So it's almost a reflection. Not quite. I mean, I do stuff over here just to show off and teach and say, well, let's try this, that, and the other thing. And you know, we do a lot of that, a lot of educational stuff in this class. But a lot of the more serious ones, I do those over in my real money account as well. So, and this is one I have over there. So I'm looking for good earnings, and that happens at the end of the day. All right, let's go back over. This is the stocks version. Let's go back over to the futures version and look at the market flush on the open. So down, down, down that thing went. And we're looking at this is the Dow. So if we bring up all the charts, let's get rid of this one here. And then we can see a little bit larger screen version. So the NASDAQ is starting to rally. The Dow is flushing. The S&P, that's a range 25. It's not doing anything. It's just dead. And the Russell trying to drop here on the range bar 6 as well. Man, that Dow, though, what the heck is wrong with the Dow? Look at it flush. Are we going to get a flush and then a rally back up to the VWAP? It'll probably flush nice and look at it go. Holy cow. And you know, right as soon as we say, well, let's go join in, that's when it'll turn and start to go back up. That's our kind of luck, right? We want to join in. Do we want to go short on that thing? Nope. See, good thing we didn't. Pop right there. Hit our yellow dot. We can go the other direction with it. See if it wants to go up, though. We can try. Oh, look. Second I pulled the button. Figure it broke the yellow dots again. The yellow dots, what are the yellow dots, Lan? Those are the average true range. So basically, my favorite strategy when we're scalping is just to buy on a crossover the average true range and anticipate a rise above the average true range or a fall below the average true range. As long as it stays above the average true range, we want to stay in the market. As long as it turns and goes below the average true range, we want to get out or take a short position. It can really be that simple as long as the market is trending nicely. If the market's not trending nicely, it's not a very good strategy. So you don't trade it, right? Of course, it's hard to trade any strategy if the market's not trending. So I guess we're in the Dow. So there's our position. We put one position on the crossover. I tried to do it right here on the first crossover of the yellow dots, and that didn't work. It popped us right back out right there. So when it popped up one more time, I tried one more entry, and now we're just trailing up on the yellow dots. That's all we're doing. Now, if we would have done that right up here, this crossover, see now the little yellow arrows right here, these are just telling you, hey, we're above the average true range, we're below the average true range. We're above the average true range, we're below the average true range. That's all those yellow arrows are. Now, these red arrows, those are telling us the Fibonacci sweet spot, all right? Now, remember, we got Fibonacci going on. And so Fibonacci is what's turning the price bars red, yellow, and green. Now, we just got hit. It just came down and hit our little yellow dot, so it knocked us out, give us an impression that it was going to cross over. So now it's starting to fall, so we can do it again to the downside. Since it's got a stronger downside trend, this is a little counter trend on the way back up. We'll see if we can't get a stronger trend on the way down as this thing's flushing out the bottom. And as long as it stays on the way down, and we're, of course, using crazy, funny charts. Let me get me out of here again. As long as we're using these crazy, funny charts, which are called range bar charts, with Heikin-Ashi laid over the top of them, you get these smooth moves in the market, kind of smooths things out. All right, so these little yellow dots, and I trail them pretty close, right behind the little yellow dots, as close as I dare put them, because I don't like the market to turn around and bounce me out, turn around and go the other way and take a big loss and get to break even sooner. The problem with having them that close is I get bounced out a lot. And so if the market's not trending nicely like it is over here, then you get a lot of choppy stuff. Well, you get bounced out a lot. Okay. And so if you really think the market's going to go, you can add a couple more extra contracts in there. So bang, bang, bang. And then you anticipate a rally and see if the market won't continue farther. If it doesn't, you just get right back out because you're wrong. And if the market slows down and starts to go sideways, well, stop trading. But first thing here in the morning, sometimes we get some nice trends, and it's worth giving it a shot. So we can take one or two off as they hit these areas of resistance. We got 3 in. So we're rallying up, going up, going up. Come on, keep going, buddy. So we're going to pop one off. I just took one off, so I'm going to delete one out of here. These are our limit orders. We can just take profits up here, bring these down. If the market comes to these areas, we'll just take our profits off. If it goes up and breaks a new high, we'll just take another one off right there. Otherwise, we'll just get stopped out right here. When it comes back and bounces us out on the yellow dots. There you go. So we just took another profit. So right now we're up $275. Got stopped out $350. All right, $350. That's a good morning. Let's stop right there and go over and start doing our seasonal stuff. All right, so we did a little scalping here first thing in the morning. No harm, no foul, right? So I know we're supposed to be talking about seasonals, but it's fun to come and do that. We could get, look, it's doing it again. Another little signal right there. We could get in right there and try it. Nah, we've made our $350. Let's go over and do our seasonal stuff. I know this is what you're all here for. It says out on the little marquee out front, the little thumbnail, YouTube thumbnail, we're going to talk about seasonals. So this is the seasonal nature of markets. We're going to look at our seasonals portfolio. And for those of you who are new, we've got some new guys in the room. This is a software program called Trade Miner. And what it does, it's a seasonal nature of markets. Markets have a tendency to do the same thing over and over and over again, year after year after year. It's easier to think about from, this is a boring screen. So while I talk about it, let's look at a more exciting screen. So markets have a tendency to do the same thing over and over and over again, year after year after year. Now, it's easy to understand this concept in, let's say, the futures market, where we have like corn, wheat, soybeans, right? We plant them at the same time every year. We harvest them at the same time every year. We bring them to market at the same time every year. They're susceptible to damage at the same time every year. Too much rain, not enough rain. Storage costs same time every year. Delivery costs same time every year. So this is a known seasonal effect. All right. So we have seasonals that occur every single month throughout the year. I actually in Pit News Magazine, we highlight those seasonals every month. So there's a section in Pit News Magazine. So if you guys are not familiar with Pit News Magazine, it's a magazine that we have here at pitnews.com. It's our magazine. And for example, let's come in here and look at the August issue. Pull up the August issue. So this is the August issue of Pit News Magazine. And if you come all the way to the end, this is the seasonal article in Pit News Magazine this month. And we talked about the harvest moon sowing the seeds of August market. All right. So we talk about what is the seasonal nature of the market this time of year. Okay. So that's the seasonal nature of market. Then we come down and we talk about different events that occur in the month of August on a recurring basis. So what's happening and what trades are available that happen, and are they generally bullish or bearish during this time of the month? Now, if you like this idea and you like this concept, go subscribe to Pit News Magazine. Just real quick here. Pit News Magazine is right here. It's 50% off right now until the end of the month. So we're doing a special $49.95. Use this code right here, 50% off when you check out. Go to pitnews.com, subscribe, and you get it for $49 for an entire year. All right. And it's got articles in it all about trading. It's a great, wonderful thing. You can get your money back if you don't like it. Try it for a couple of issues. If you don't like it, you can get your money back. All right. But I think you're going to love it. So you can listen to all the articles. That's one of the great things about Pit News Magazine is that you can listen to all the articles. They're all recorded, so you have the notes there so you can read them, but then you can listen to them as well. You can read them, and then oftentimes we'll even put video with them. Okay, so let's go back to the magazine. So this is what's going on with the seasonal nature of markets, and we highlight that every month in Pit News Magazine for that particular month, and then we give the trade recommendations. All right, so that's what we're talking about now. We're over here, and we're talking about the seasonal nature of the markets, and we have a tool that tells us what those are, what those trades are. And so we are running a portfolio that helps us understand what those are. So we're going to come in here and we're going to go to our portfolio. Let's just go to our portfolio and see how we're doing. All right. So we picked these so far last month, profit and loss. Okay. So we picked Walmart, or actually the seasonal nature of the markets picked Walmart. We didn't pick Walmart. The AI system picked Walmart for us. So Walmart, although has a score of red, the AI system picked it between August 7th and September 5th, 88% of the time over the last 16 years, 2% return, and it is currently up $1,242. And it doesn't stop until September 5th. Now, we could take our profits off right now if we like that, or we could say, well, it's going to go longer. So we're currently up 1,242 on that trade. So let's go look over at Walmart in our software. So we're going to look at Walmart. We got to go to our seasonal portfolio. Seasonals. JKL, middle PQRS. Seasonals. Okay. Oh, we're going to get a new seasonals portfolio. So what we got in there is we got Walmart, WMT. All right, so right on the seasonal schedule, just like a train on rails, that baby popped and we're up nicely. All right, so we're up 1,242. Do we want to take our profits? It says let it run for a couple more days. It says let it run through the next week. It says let it run until September 5th. We put it on August 7th. So this has been running ever since August 7th. When was August 7th? We put it on clear back here. June, July, August, 6, 7. Right there was the day we bought it in the seasonal trend right there. And then it turned and just went up ever since. All right. So that was the seasonal nature of this market. It's done that. Let's look. Over the last, between August 7th and September 5th, 88% of the time over the last 16 years, it's made that trade. It's made that trend. And it's averaged 2%. But what are we up right now? We're up 12%. It's really popping today. So way above the 2% average. That's why it had a red signal over here, because it's generally a pretty low move too. But it popped really hard, up 12.43%. We're up 1,242. So way to go, Walmart. All right. The next one is Royal Caribbean. We put that one on August 21st. And it says to run that one until September 18th. So the symbol is RCL. Let's go look at it. We're up $600 on it. RCL, Royal Caribbean. Okay, that one's doing well too. It says, seasonally speaking, between August 21st and September 18th, 80% of the time over the last 15 years, Royal Caribbean has increased in value during that time frame 10% on average. So we're up 594 on it right now, and we're up almost 6%. So it averages 10%. So we got room to grow there. Walmart, we're way above the average. So if we wanted to just take our profits and run away, we could. But we're going to hang on to it. And then we got Royal Caribbean at 595 again. We got into that one on August 21st. August 21st, right there. So right at that turn, right there's where we got in. So it's up at the top of the Bollinger Bands right now. So we may see a little bit of a pullback. We got our area of resistance across the top. The blue lights still quite a ways back. Got a nice little trend happening here. We just kind of keep an eye on it. If we want to get out early, we could. We're going to let this one run too. So August 21st, the next one we're in with Salesforce. Salesforce, August 21st to September 11th, 80% of the time over the last 15 years, this thing has returned on average 70% or 7%. So between August 21st and September 11th. It's a software company, and we're up 117.80 on it. So let's go look at Salesforce CRM. CRM. All right, so let's go over and look at CRM. It's not moving very much. What does it say? It says August 21st to September 11th. So we got in on this the 21st right here. So it's just kind of sitting neutral. We need to see some action here, buddies. We need to see some breakout to the upside. So it came up, made this nice little run, hit this area of resistance, and it's just kind of poofing out on us. So it says to hang on to it. We're up $117. Let's go to the next one. ConocoPhillips, August 23rd to October 11th. Now, if this one doesn't make me money, I'm going to be really PO'd because it kept popping up. The AI system grabbed that one like 10 times. It really liked that one. Every time I took it out of the list, it put it back in. I was like, I don't want that one. It put it back in. I don't want that one. It put it back in. The damn thing kept going back in. Well, we're up $144 on it. It's got a medium probability. Between August 23rd and October 11th, 80% of the time over the last 15 years, this thing has averaged 8%. So let's go look at it. COP. See, we had a little bit of a rally and now a little bit of a flush. What was the date we went in on this thing? August 23rd again. August 23rd. So we got in, well, we've only been in it 4 days. We got in on it right there. I wasn't real thrilled about this market because we're coming into a political battle right now. I don't know if you guys have heard, but there's a couple different camps for running for president. And the one camp is very against oil exploration. They want to move away from carbon and they want to move towards electric, which is of course carbon, and I don't think they realize that. But don't tell them. The secret. If you make electricity, you don't need oil and gas. And so because they shut off all the oil and gas and stopped producing it, it made oil go really high. And so that caused everything else to get really expensive. And there's an article in Pitt News Magazine coming out just about it. If you don't have Pitt News Magazine, you should get Pitt News Magazine for this one article. It talks about why the whole country is in a massive recession. And we talk about how to solve that big, massive recession. All right. But there's two groups of people. There's one side, we'll call them red guys. And there's another side, and we'll call those blue guys. The blue guys, they don't like the red guys. And the red guys, they don't like the blue guys. The blue guys don't like gasoline and oil. They want to get rid of it. The red guys are like, well, we can't get rid of it because our entire economy exists and survives on this oil. So in the beginning of this, they cut all the oil and gas off, right? And that caused huge, massive inflation. That's what caused inflation. Everybody's like, oh, it's this, that, or the other thing. No, we all know what it is. Cut off the oil. It raises the price of every single thing that's ever produced. And again, there's a whole article all about how this is in Pitt News Magazine. You got to read the article. If you don't get Pitt News Magazine for any other reason, you got to get it for this article that comes out on crude oil. It's a really super good article. Here, go to pittnews.com. Use the code 50% off when you get it, and you'll get it for half the price. All right. So Pitt News Magazine, coupon code 50% off. That's the code. That's not the amount. Of course, that's how much you get off, 50% off. But that's also the coupon code. Use 50% OFF, and that's your coupon code over at Pit News Magazine. You get it for half off right now. And join us. And in there's going to be a fantastic article in the August issue on crude oil and diesel is what it's all about, because diesel is the backbone of the world. If we don't have diesel, we all die. Literally, we die without diesel. So anyway, they shut off all the diesel, and that made the price of oil go really high. But then elections come up, and everybody's like, things are really expensive, and they're like, oh, that's because we made prices really expensive when we shut off oil. So they started producing oil again. They started drilling and everything, all kinds of really, fun stuff with oil. So they started fracking again. They started oil again. They started pumping oil. And so prices of oil have been coming down. That's the point I'm making right now, is the price of oil been coming down. The reason they've been coming down is because the blue guys decided that they wanted to win election again. And they know that if prices are expensive, then they don't win elections. So they got to bring the prices down. And then they can say, see, we fixed the problem of the high prices, which they caused. So they're bringing prices down, and oil is coming down, and they're doing that to get elected. Now, my concern is, after they're elected, will they shut all the oil back off and prices go shooting back up again? If they do, we're going to be very ready for that, all right? If the red team gets back in, we're going to short oil because oil is going to fall in price. If the blue team gets back in, we're going to buy oil. Oil is going to get really super expensive again, all right? So that's how we're going to play this, one way or the other. Whether you want the blue team in or whether you want the red team in, I don't care. I don't care one way or the other. It's just, it is what it is. All right. Red team, oil is going to go down. Blue team, oil is going to go up. Okay. And right now, blue team wants to get reelected, so they're making oil go down. And so because of that, comes back to us, right? And because of that, I do not like our position in ConocoPhillips. And we're up $144. So it's kind of, that's where that whole conversation just came from. All right. That's why I don't like our ConocoPhillips position, because it's a long position, and I think they're trying to drive prices down. Okay, so the next one is United Rentals. United Rentals, August 27th to September 18th, 81% of the time over the last 16 years, this stock has increased in value by approximately 8%. All right, and it's currently down 18%. So that's our loser right there. So we could cut our loser and get rid of it, or we could wait. Now, there's oftentimes a drawdown. You see all these little charts down here. These are like candlesticks. And so the little lower window tells you how far they draw down before they come back. All right. So you can see that they mostly has, look at this big drawdown. In 2015, it drew all the way down here, turned around, came all the way back. These all had little drawdowns down in here, went below our number. So they all have little drawdowns. So that little drawdown's not too serious. August 27th, though, to September 18th. See, we got till September 18th. We got a while on this one. August 27th. Now, what was the symbol? URI. URI. Oh, that doesn't look good. I don't like that. That looks like an ABC pattern to me. A, B, C. It looks like it wants to come back down. I don't know. We could cut that one. We could just get rid of it and take our loss. How long we been in it? How long we been in that one? August 27th. Oh, we just barely got in it. August 27th. We bought it. Oh, we bought it yesterday. What a time to buy it. Well, we got in on the break above the previous. Well, let's do a Fibonacci projection on this thing. Fibonacci says, well, that's not too much. Fibonacci says it should be right here relatively soon. Huh. To me, it looks like it's flushing. And is it going to be able to get back up above our zone, even if it comes down just a little bit down into the Fibonacci sweet spot? and turns around and rallies again. It's been in that Fibonacci neutral zone for a long time. Look at that big neutral zone. It's at the top of the Donchian channel. So those are Keltner bands. And it went up and touched the Bollinger bands and flushed. I don't like that one. Let's get rid of it. Let's take that one out so we can put something new in. Now, the way we get rid of it is we come in here and we remove selected and we move it to closed trades. We're going to close that trade. All right. We're going to close it with an $18 loss. So now we're going to come to our counting with our closed trades. This is what we closed out already so far. So we closed out, there's our $18 loser. We closed out our $9.25 winner, our 13 winner, 733, a $2,000 winner. That was on NVIDIA. And then a $239 winner on Copart. So that's our first loser. Now we just started this. We started this this seasonal tracking. I mean, we've been doing seasonals for a long time, but we haven't really tracked it like this. So that was our August month. Now we're going into this August, September. So that was closed out an $18 loss. Is that all right that we did that? You guys don't mind that we got rid of that dog, right? So let's come back over here. So now our portfolio has 4 in it, and we're all doing good. We could take that profit and put it over there on Walmart, but let's see how it wants to run. All right. So now what we need to do is we need to find some more. Let's come into this, our neural network. Let's get rid of these. We're not looking at these anymore. Remove selected. There's our portfolio. All right, let's do a search. So in the month of, we're still in August. But we're coming into, let's see if there's anything left in August. We're going to put this at 80% of the time. So let's read this. Search for trends in the month of August. Find trends that have won at least 80% of the time. We're just going to do bullish. We're not interested in taking short positions. List trends that last at least 10 trading days, but no more than 35 trading days. Find at least 10 years of history. All right, so they have to be 80% profitable at least 10 years. Doesn't mean they can't do more. They can do more. They just have to be at least 10 years. So remove same symbol duplicate start dates, remove same symbol overlapping trade dates. I know that's tiny for you guys, so I'm reading it for you. So we're going to hit search, and we're going to let that go. And while that's searching, we're going to go over and look at the futures market. Oh, my goodness. We should have stayed day trading. We'd be rich, rich, rich beyond our wildest dreams. Are any of you guys still day trading over here on the Dow? Look at that, baby, rock and roll. Holy smoke-a-roonies. Come and say hi to a few people. There's Bruce coming in with the gold. How you doing this morning, Bruce? It's nice to see you. We've got Thomas Shaw. It's great to see you, Thomas. Good to have you. Coming in with the silver. Abasai Valdez. I'm sure I just screwed up saying your name. Abasai. You're going to have to pronounce that for me. Valdez. It's good to see you. Glad you could have it. Here with the claiming the bronze, and we got Michael Bruce coming in. Number 4, Michael Bruce. I love your little picture, that little monkey. Don't get your hand caught. And then there's Kirk Schwartz. And we got a bunch more people in here saying hi or watching. So if you guys want to put your names up, say hello, put your little marquee up, I'll make you famous. But my goodness, look at the Dow. Holy cow. Hopefully you guys were still day trading that thing when I kicked out and left. That was a beautiful market. Unbelievable. Wow. Wow. That's a moneymaker there. Is it going to continue? It looks like it wants to drop. We could pop one in there real quick just to see. No, it's starting to go sideways. It's kind of dying here. Let's try one real quick. While we're waiting. Are we going to get bounced out? We got bounced out. All right. We tried. Let's go back over and see if our scan's done. Okay. All right. Here we go. Back to the seasonals. So let's sort by let's sort by score. Let's just go by score, and we're going to take all the greens. All right. The AI system goes in, and I'm going to show you right up in here, user preferences. Now, if you guys any of you are familiar, I'm real big into AI. I love AI. AI is the coolest thing that's ever happened to our industry. I remember when I was a kid, little 14-year-old kid standing in Radio Shack when they first came out with the old TRS-80. And I might have been 15. I don't know, something. I couldn't drive. I was young. And so my brother pulls out this brand new TRS-80. My dad owned a Radio Shack. And so I worked at the Radio Shack growing up as a kid, and he pulls out this brand new TRS-80 computer. He turns it on, he brings it up, and he says, "Here's a computer." And my first thing was like, "All right, let's start asking it questions. What can it tell us?" And my brother looked at me and he's like, "It doesn't work like that." And I'm like, "What do you mean? I thought computers were smart. You're supposed to be able to ask them questions and they could give you the answer." Boy, was I wrong. What am I, 60 years old now? Finally, it's invented. It took them all the way from the day they opened up the TRS-80 in Radio Shack when I was a little boy, 10, 13, 14 years old, to now that I'm 60 years old before they finally invented computers that you could ask them a question, it could tell you an answer. Isn't that crazy? What's that AI thing you're talking about, Lan? What do you mean AI? What's that AI thing you're talking about? Did you know you can come over here and you can go to a little website, hit plus on here, and you can go to a little website called Perplexity, PERPLEXITY.ai. Can you type that in? Perplexity. It pulls up this little thing right here and it says, "What would you like to know?" I would like to know, how much does a pigeon weigh? How do you spell pigeon? E-O-N. Pigeon. W-E-I-G-H-T. How much does a pigeon weigh? And it gives you the answer. The weight of a pigeon can vary depending on the species and individual characteristics. Generally, the average weight of a pigeon is about 300 to 400 grams, approximately 10.6 to 14.1 ounces for most common breeds, such as the rock dove. Some larger breeds, like the king pigeon, of course, this isn't about pigeons, so let's tell it. We want, come back up here, new thread. I click on this and I say, what is a call option? A call option is a financial contract that grants the buyer the right but not the obligation to purchase a specific underlying asset, such as a stock, at a predetermined price known as the strike price within a specific time frame until the option's expiration date. Oh my gosh, that's cool. What is delta in relationship to stock options, and how does it work? Answer. Delta is a key concept in options trading that measures the rate of change in an option's price relative to the change in the underlying asset's price. Here's how delta works for stock options. Oh my gosh, they finally invented the thing I asked for when I was a little boy in Fillmore, Utah, growing up, working in Radio Shack at age 14. You can now ask the computer questions and it gives you the answer. That's cool. All right. That's AI. So when AI comes in, this is what AI does. Now, how do they do that? The reason I brought that up is not to teach you to go use Perplexity, although you should be. If you're not using Perplexity, this is what we call the Google killer. Because Google, you go ask Google a question, and all it does is show you a whole bunch of advertisements and then websites that talk about that subject, right? And then you have to go do research on 10 million websites to find the answer of what delta is. They don't just give you the answer. That's why Google sucks. Google is only good nowadays. The only people you're using Google for is if you want to buy something from a company, you need to find a company to buy something from. And that's if you're not buying it from Amazon. I mean, I don't know. So don't ask me. Anyway, I am, I like Perplexity. It's really cool. It's Google killer for me. I don't even ever use Google anymore. So you just come to here. But the reason I bring that up is because you ask, how do they do that? Well, they train it on all the information, and then they have what they call weights. And the weights determine how they do that. And so the reason I bring that up is the weights are in TradeMiner, and here's the user preferences. And right here, this is the score weighting of the AI system. So that's how AI works. All right. AI has weights, and you have weights that help you determine. And of course, AI's system very complex, lots of weights. In TradeMiner, we don't need all those weights. So we have the weights for the score, and that's what the score is. So it's a weight. This is the weighted system of the score, and you can change the weights of the score to make it score things that are more important to you. Okay, and so that's how AI works. You set up these weights, and then it will find things that are more important to you based on your search criteria, and it'll give you the answer. So you can change the weights in TradeMiner. So that's where that whole conversation comes full circle. TradeMiner is an AI system that has weights in it, and you can adjust those weights in the user preferences for the score. All right, so I'm sorting the score, and the score can go from 0 to 5. 5 is the highest you can get. So this one here is sorted on the score, and then of course it goes from green to yellow to red. All right, now the score is not telling you that it's not following the criteria above. It certainly is. Everything in this list is in the month of August. Everything has a trade as won at least 80% of the time and is bullish between 10 and 35 days and has at least 10 years of history. The score tells you which ones of these are the best. All right. Which ones of these, according to the weights, are the best. So yellow doesn't mean that it's a bad trade because it still meets these criteria up here. It's still in the month of August. It's still 180% of the time. It's still bullish. It's still between 10 and 35 days. It's still at least 10 years of history. It probably just either didn't have, lots of consistency. It probably had just one big month that made all the money. It might have something that's not perfect. It's not as good as the others. This one here, the reds are more closely towards the end of the season, which means that the seasonals trend could be waning, and so it's not doing the seasonals quite as well. That's why you have these lower performing ones. That one might be performing low because it's decreasing in value. Look at that. It's got a downtrend. Everyone's been smaller, 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 smaller. So it didn't score very high. Doesn't mean it didn't happen. It still does. August 23rd to September 9th, 92% of the time over the last 12 years, Xylem stock has returned on average 3%, which isn't great. It's not bad. 3% in 18 days in a month. That's good. If you annualize that, 3 times 12, hey, that's a lot of money. All right. But it's slowly getting smaller and smaller and smaller, which is probably why it scored lower. You come down to the reds and see why they scored lower. Come all the way down here, some reds. They scored pretty low. There's Pepsi. There's Discover. Why is it low? Well, look at this during this time frame. Just because it's a good stock, there's Microsoft. Microsoft is a good stock, but not between August 2nd and August 21st. It's not a very good trade. Okay, and for some reason, it's had lots of, look at this, and probably because it's got lots of bottoming tails. Look how big the drawdowns are on it. So it's just not as clean and pretty as some of the others. So if you come up here, you go to the greens, well, they got a high score, probably this one, because it's increasing in value over time. That still doesn't look very good to me. This was pretty nice. See how it's increasing in value over time? It had a red one towards the end. That's why it's not 5. It's 4.49. Look at NVIDIA right here. This is a longer period of time, and it's increasing over time. So that's why it's got a high score. So that's how this works. All right. So that's why the high score just kind of has better trends. It has more consistency. They just seem to be better trades. So we're going to take all the greens. All right. Boom, 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 boom. We're going to grab all of them. And we're going to take them all over and we're going to move them into our neural network section. So we're going to add to step 2, which is the neural network. We'll bring those over here. And these are all the green ones. Okay. Now, some of these are already been trading. So what we're going to do is we're going to sort, because today is the 28th. So we're going to come down to the 28th. Oh, we've only got 2 days left. So we're going to all these are going to go back. They're going to go away. Look, you can go look at all the historical ones. You can see all these and see how they did. Look, that one's up $900, up $1,000, up $600. That one closed out $1,000. That one closed out $1,000, $1,000. We didn't put these in our portfolio, but it's telling you all the stocks. That one lost $391. This one's still open. The blue means they're open. So there's still open trades. Look at all these profitable trades that we could have had. But you can't trade everything. But all these are the seasonal. Look at all those. All the black ones have closed out. That closed out $1,000. That closed out $1,000. That closed out $1,000. Any more? There's one that's open over $1,000. There's one $1,000. There's one $1,000. That's still open. Norwegian Cruise Line. So anyway, we don't want to select all those. I didn't mean to actually select all those. Unselect, 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 unselect. Oh, wait, we got those. They must be in our portfolio. Here, we want to get rid of all these. The only ones we want are the last two, the August 28th, because the market month's almost over. So let's remove the selected. Okay, so we got two left. August 28th, which is today, and August 28th, which is today. So we got Southwest Airline. Both are green. So Southwest Airline, August 28th, September 16th, 81% of the time over the last 16 years has returned on average 5%, $471. That's not bad. That's not a bad little trade. Starts today. August 28th to September 13th, 82% of the time over the last 22 years. Look at that one. Who's that? Packaging Corp. Calendar days, 3%. So it's not as much, not as on average, hasn't returned as much, but look how clean it is. It got a lot of history. Gotten a little kind of funny over here at the end. It actually scored higher than Southwest Airlines. Let's run the neural network on it. Let's see what the AI system calculates. So we're going to look at the probabilities. It's going to go out and look at the charts. We're going to go look at the charts too. Let's go look at it while the AI system is looking at the chart. Oh, this one says Southwest Airlines. It puts down as low. Oh, look, and it's had the last 3 years. It's not done well on this seasonal strategy. Let's go look at it. And it says it's low again this year. We might want to kick that one out. LUV. It does not like LUV. Let's go to LUV. Oh, look at LUV taking off like a rocket ship, though. That's pretty cool. That one's taken off. But it's already taken off. That's a problem. Let's look at the Fibonacci projection on that. We go from here up through the yellow zone, measure that yellow zone about right there. We're already into the Fibonacci extensions. Let's turn on the Fibonacci projections, display projections. So we're just breaking above the Fibonacci zone going into Fibonacci projections. There's 127, 161.8. If we come up here, we draw a couple of resistance lines. I'd be more inclined. Remember our lesson yesterday or the other day where we talked about Darvas box? So this is Darvas box 1 right here. And it's getting ready to move. Looks like, well, it's not yet. This is the top of this one. So it's getting ready to move up into the next Darvas box. That's what it looks like to me. It wants to go up here and start to wobble around up there. I would put that Darvas box back up down to here, right? Which is this level here. So we put this level up here. Okay, so the overbought region, remember how we talked about this? If you haven't seen this, go watch the past video. I got another lesson I want to teach you because last we talked about Darvas box. We talked about overbought, oversold, right? So we understand overbought, oversold now. If you're not familiar with overbought, oversold, I've got another video. Go watch the previous video. It was just the other day. It teaches about overbought, oversold indicators. And now we're going to, on the Darvas box and how that all works. And now I'm going to go on. I can't do it today because we're talking about seasonals, but I got a lesson for you probably on Friday because tomorrow we're going to do Power Hour. So I missed Power Hour yesterday. Something suddenly came up and I couldn't make it back to my desk. I couldn't get back from my office and I missed Power Hour yesterday. So if any of you guys were waiting for Power Hour yesterday, I apologize. But we'll have Power Hour tomorrow and then on Friday. So make sure you put it on your calendar to be here on Friday because we're going to talk about all the different kinds of indicators. All right. We're going to talk about these types of indicators. So you have overbought, oversold indicators, and there's strategies for trading those. And then there's histogram indicators. All right. So we're going to learn about histogram indicators, and we're going to learn how to trade histogram indicators. And we're going to line them all up. We're going to look at them. We're going to see the differences between them all. And we're going to talk about histograms, and we're going to trade histogram. And I'm going to show you the core strategy that's based around histogram trading. All right. So that's a longer term investment strategy. And it's not that you can't do it on, you don't really do it on day trading, but it's more of an investing strategy. And it's how I invest over the long haul when I'm trying to trade my stocks. I do the core strategy based on histograms. All right. And I'll show you how that works. It's the accumulation distribution model. Some of you have heard of it. But that's what we're going to talk about, and it's all based on histograms. All right, that's why you have different indicators. What's the difference? Why do we have a stochastics indicator, for example? If I lay that on the chart, getting a little off track right here, but it's fun to get a little bit of insight of what we're going to do next week. So we're going to come down here and turn on the stochastics indicator, for example. All right, and see how it's a line, and it goes up and down and over and top. And then you have the other one underneath it, which is a histogram. Why is there one versus the other? What's the advantage? What's the disadvantage? Why do we have this kind of an indicator and this kind of an indicator? Why are some indicators histograms, and why are some indicators lines like this? And then we got another one. We got another type. We got basically three types of indicators. Let's come in here. I'll show you one more. It's the Larry Williams. Where is it? Average. No, there it is. AD. Then we got this kind of an indicator. So now we got three different kinds of indicators. Now this one here, the AD, is just a line that moves through. It's that green line, right? I think that's the one we just turned on. So it's a line that moves through the indicator window. What is that one doing? Why do we have that? And then we have these histograms, and we got multiple different indicators of histograms. Why do we have those? What are histograms? What are they designed for? And then we have like stochastics and RSI and CCI, overbought, oversold indicators. And we talked about those. So we covered those kind. On Friday, we're going to cover the histograms. We're going to talk about histograms and why those are important. And then we can also, at the same time, we can cover the one like Larry Williams accumulation distribution, or the AD, which is different again. It's another different kind. So we're going to have, there's basically three different kinds of indicators, and there's lots of variations. And why are there variations? We're going to talk about that too. All right. We're going to talk about how you use them. Now, you use them for different purposes for different reasons. All right. They were designed for different purposes. They don't all do the same thing, obviously. A lot of people don't realize that. They're like, well, I like this indicator. I like this indicator. This one tells me buy. That's not what it was designed for. You're using it for the wrong purpose. Okay. That's not why it was designed. And I like it for this. Well, it wasn't designed for that. It might work for that on occasion. It's kind of like throwing darts at the carnival game. On occasion, you'll hit a balloon, but that's not what it was designed for. All right. You don't throw baseballs at balloons. You throw darts at balloons. So you need to learn what the indicators were designed for. And I'm going to show you the strategy on Friday for trading these histogram indicators. All right. So let's see. Let's come in back. Let's go look at the market slowing down here, isn't it, a little bit? Just going sideways, not doing a lot of trending. Small trends. I don't know if you could get your stop to break even and make a little money on this one yet. Kind of moving a little bit dead through here. That would have been a killer, taking all your money back if you'd have been trying to trade much through there. All right. Back to here. So we got distracted. So love, LUV. No, love, LUV. What did we decide on this one? I don't really want to put that in my portfolio because it's already taken off and gone. But it says it's supposed to go. It says it's supposed to go between August 28th and September 16th. That thing's supposed to go about 5%. Let's do it. Let's put it in. I don't want to put it in. I'm capitulating on that one. The only reason I don't want to put it in is because it's already taken off quite a bit and we're already in the Fibonacci extension zone. But it may move up into the next Darvis box. That's, but to do that, it's going to probably have to make some sort of a little pullback and then an ABC pattern like that. We're going to have to get quite a rally out of this thing. We are coming into fall. Fall is travel time. People like to go on travel and vacation before they go back to school, right? but it's just been so dead. Don't really want to put it into my, let's go look at PKG. August 28th to September 13th, 82% of the time over the last 22 years, it's returned about on average 3%. Yeah, I'd really like to see something better than that. PKG. PKG. Packaging Corp. That's a beautiful chart. That's a nice chart. So we got a nice little reset right here, and we're going into drive 1, counter trend, drive 2. It wants to buy it in right now. So if it wants to buy in right now, we've got this here is, come on, Michael Bruce, label that for me. That's a B1, isn't it? I'm going to call that a B1. We're starting our new drive system here with this rally. This was kind of sideways. We got it kind of a reset here, and then we got these two drives here, but then that drive failed and came back into the red zone. Now, just because it came into the red zone doesn't mean it's a failure. So technically, we could call this drive 1, drive 2, and we could be coming up into drive 3 here. But this little red zone right here, usually the answer on that is, if it comes back more than the Fibonacci sweet spot. So in other words, if it breaks below 61.8, it's a reset. And look how all the tails came down and broke right below 61.8 from that point to that point. It came right back down to 61.8 and took off again. Started to rally. Usually that's an invalidation. If it comes down and breaks below 61.8, then we call it a reset. We start our new 3-drive pattern again. All right. But this thing, it did drive 1, it broke. Drive 2, it broke. It came all the way back down to 61.8. And since it had 2 drives, I'm going to start it over. Okay. Hindsight will be 2020. We'll see. We won't know for sure, but you never know for sure. Look, there's our squeeze. That's your Bollinger Band squeeze. That's an indication that the market should rally. And it kind of did, but then it flushed. And we're in I'm going to call that the second drive. So if that's the second drive, that means that this here drive is the B1 drive. So that's B1. That means this would be A1 down here. And I almost don't want to call it A1. I almost want to call this the B1 here. And that would mean this would be C1. If this, we call this all one big drive. Drive 1, counter trend. Drive 2, counter trend. Drive 3. That would make this be a C1. So we're going to throw that in as a caveat because we don't know. We don't know. You don't ever know until after the fact, right? Sometimes it's obvious as the nose on your face, but when it's not this obvious, you don't know. A1 could be back here. This could be the A1. That means this could be B1. This would be C1. And if that's C1 or B1, either one, that would be that this would be B2 or C2. You go with the more conservative view and say that's a C2. But that would be a B2 right there, or C2. So it's the first rally, the first pullback, making a lower high, anticipating a rise in price again, breaking above the previous high. We'd be going long. Okay. All right. Should we put both of these in our portfolio? Well, Love says low. The AI system did not like lows. So we're not going to put that one. All right. And it's already rallying hard. The only reason I don't like it is because it's got a possibility of pulling back. So let's add this one. We're going to add this one to our pick list. So we're going to add to trade, add to remove, select, reset, add to pick list. So now when we come over to our portfolio, there it is. It's going to select it because it's the only one it can select. So there we go. All right. So we just added that one to our portfolio. Packaging Corp. We're going to see if that's going to make us a little bit of money. right now we're up with open profit of $2,098, and we've closed out $3,933. Okay. We could do a September search, but we're not in September yet. Just for fun, let's do a September search while you guys are here. Let's see what we got looking forward to. Because September starts in, what's today's calendar? September doesn't start. Oh, well, you know what? We're going to be fine. We won't be doing seasonals again until August 4th. So we do seasonals once a week. Every Wednesday is seasonals day. So for you guys who love this seasonal stuff in stock market, come back every Wednesday. We do seasonal stuff, but we work every day. Mondays we do stocks. All right, we've been doing stocks on Monday, just trading stocks. On Tuesdays we do power hour, so we scalp power hour. Now we always like to do a little morning bell scalping. So on every day we do a little morning bell scalping. So and then on Tuesday we're going to do power hour scalp, and then next Wednesday the 4th, we will do seasonals again. We'll see how our seasonal portfolio is doing, and then on Thursday we do power hour, and then on Fridays we do, what do we do on Fridays? I don't know what we do on Fridays. Maybe we scalp the morning session. Is that what we do? We scalp and trade the morning bell on Fridays. My classes at the university start, and I'll give you more information as we keep going through the next week, but my first class at the university starts the second week of September. So starting looking at the calendar, that's 9, 10, 11, 12, 13 through that week. So Monday the 9th, Wednesday the 11th, and Friday the 13th. We're going to have classes at the university. Those are night classes at the university. That first week in September, those are online classes, so you don't have to be in St. George to take them. You can register for those classes anywhere in the world. So Michael Bruce, you could take one of my university classes if you wanted to. All right. They're at night. Okay. So they're just basically all strictly academic. We go in and we learn about specific subjects in trading, and then that's what this class is for, is the lab for my university classes. So then we come out here and we practice what we preach. So we go into great detail into specific subject matters in these classes. All right. So that's what's going on there. And they are online for my first classes are all online. I got to get my schedule out. I'll get my schedule all put together so you guys can see it. And if you guys want to join who are not local to St. George, I'm not in St. George, so I'm not teaching the classes in St. George. That's why they're online. And then I moved back down to St. George in October, and then all the classes are live at the university. So then if you want any online classes, you have to take them now if you're not in St. George. All right, but you can take those classes. You don't have to be a student. They're just community, what we call continuing education classes. You can take them online, register at the university. I'll get you the links. You can all go register at the university. And the whole community, everybody's welcome to come take these classes. All right. All right. That's it. I guess we're done, aren't we? Let's go back over and look at the market over here. Well, there was a little drop right there, but look at all this dead market through here. Not real thrilled to take another trade. We're up $320. We want to go put that. You know what? I haven't been very good at keeping up our spreadsheet, but we ought to at least go put this one on there. So our spreadsheet, today is Tuesday. No, today is Wednesday. I haven't been good at keeping up our spreadsheet this month. Very good. $320. I don't know what the heck we were doing over here when we lost all this money. We've been having some bad mornings, haven't we? Look at these. What did we do there? Doing some scalping, Minesweeper. Oh, that was Minesweeper. We should go back and do more Minesweeper. That made a lot of money. That one, what did we do? It says, Lan says never trade the big news event. Oh, that's when the Fed was speaking and we got our heinies handed to us. We had a bad day. Couldn't catch a break. Nothing worked. 3 strikes, you're out. Tried, but couldn't make any money. So at least we got a good run today. That was nice. What was this one? Lan picked the wrong direction. Thought the market might go short, but I was wrong. And it went long. You know what was funny? Was this day right here. I then had a student come in and we worked one together, off hours futures, and I made $2,100 with him. Which is exactly what we lost in the morning session. I made $2,100 trading with him in the afternoon session. I better write that in there. New note. Day traded with a President's Club student. Had a really good afternoon. You know, it's funny because sometimes my students will come and we'll work together, and we'll have bad days in the afternoon too because we're practicing, we're doing stuff, right? You're not always waiting for the right moment, the very best moment to be trading. That's the thing about trading is you should sit on your hands a lot and wait for the good times to trade. We have to trade because, hey, we're here, right? And just because the market's not moving, well, I don't just want to say, okay, guys, well, thanks for all coming to class. The market's not moving. Let's not trade. So a lot of times we trade just to learn, to see, to practice, to do that, right? And I do that a lot with my students. And it's funny because sometimes my students will come in and we'll do the same thing, right? Well, the markets aren't really performing very well, but we need to practice what we're learning. So let's go in and set up the tools and we'll learn all about them and we'll take some trades and see if we can get some trades to happen. But we're probably not going to make any money because the market's just not performing for us. It's dead right now. You can't trade a dead market. But this just happened to be one of those days where it was like, well, we were practicing, we were doing everything. We were just going in and we were showing them all the tools. We were setting up all the software, setting up all the QOCOs. And every single time we got in and we shot the market, man, we made money. It was just one of those days where everything we did made money. It was really cool. It was really fun. And we were just practicing. We were just trying to, show them the tools. Here's how they work. And it made money hand over fist that day. I think we had like 1 or 2 losers, but it was pretty cool. And then just that morning, it was just the opposite. Did the exact same thing. Did the exact same thing on that morning session that we did in the afternoon session with the exact same tools, exact same setups, exact same strategy, everything. The only difference was the market. The market was in a nasty morning with the government report coming out. And then in that afternoon, the market was still very active, but it just wasn't chopping the living crap out of us. Did the exact same things. Just that was just the dichotomy between those two. So anyway, I thought it'd be fun to bring that up. Options future. Did we close out an option today? We did. We closed out a loser. So we closed out a loser today. Where's my loser? Right here. We go into our accounting portfolio. We closed out a loser, 1833. So on the options futures, didn't we have a seasonals in here? Options stock right there. What did I say? We lost $13, right? $18, 1833. So minus 1833. That's not seasonals though. We haven't been putting. Have we been putting seasonals in this spreadsheet? Huh. I don't know. My spreadsheet's not been being kept up very good. I've been paying more attention to my real money stuff, and I apologize. Not been doing so well on keeping this up. All right. Not exactly sure what's happened these past couple days. I'll have to look at videos and see. All right, guys. I guess I got a real quick Sunday school lesson for you. and then we'll let you go. So first thing here, don't swing for the fences, plan your trades and trade your plan. This causes horrible losses, turns winners into losers, causes inconsistent results. This is a marathon, not a sprint. Winners have a lot of base hits, have realistic expectations. All right. So don't swing for the fences. Base hits are really good eating too. And so, know when to stop. Use your risk and money management strategies. 3 strikes, you're out. Don't keep trading. Don't blow your account up. And then trade until you lose once and then get out. If you're win, then get out when you lose. That's it. You're done. Walk away a winner. That's the hardest thing for traders to do. Walk away a winner. Kirk says there's no seasonals in the spreadsheet. Yeah, I don't think we've been putting seasonals in the spreadsheet. Maybe I ought to go take that 1833 out and we'll just keep that. We'll keep that up in the, I don't know. Should we put them in the spreadsheet? Maybe next month we can do that. Kirk says take that out. So we'll take that out. All right. No seasonals in the spreadsheet. We'll put a column in there for seasonals. Maybe we'll try and track the seasonals over here too. I don't know why we need to track the seasonals over. Well, we need to track the seasonals over here because it tells us how much money we made in the month, right? Because we got multiple methods of making money. We just keep tracking them and tracking them. I got such a big surprise coming for you guys. I can't wait to tell you this big surprise we got coming. We're automating this spreadsheet. We're going to make a little program that takes this spreadsheet and just turns it into it's going to be so beautiful. All right, there's a little hint. What's coming? We're going to automate this spreadsheet. Okay. Because it's kind of hard. We're going to make it easy. We're going to make it so easy. We're going to make this spreadsheet just unbelievable. All right, guys, that's it. We're going to maintain our seasonal trades over here in TradeMiner, but next month we'll have a column in our spreadsheet for it, and we'll start picking it up over there. Maybe I can come back and put all this stuff in. I'll put a column in there and put all this stuff over there. How's that? All right, guys, that's it. That's all I got for you today. If you had fun today, if you like this kind of stuff, go ahead, hit that little like button. That always helps the YouTube algorithm. They like to see that you guys like what we're doing here, so hit the little thumbs up. And if you haven't subscribed, subscribe. It's like there's less than 50% of the people who actually watch my videos are subscribed. So go ahead and subscribe so that you can be notified when we go live. And we will see you guys. What's today? Wednesday, Thursday? Tomorrow for Power Hour. We're going to do some scalping on Power Hour. All right. Take care. We'll have fun.